Thank you. The chairman mentioned this as being a very important day. I agree, not because of the vote on the stimulus package. I believe it could be a very important day because I think this hearing and the testimony today could go a long way towards restoring confidence in our financial services industry and in the people that run it. If they publish the right story tomorrow, you never know what the story will be. But what I heard, and a lot of this I know, but I don't think most of the American people know it, is that we gave taxpayers, or you gave taxpayers, an equity share in your businesses at depressed prices. And as many of you have said, there's going to be, in some cases, a handsome profit and others a profit. And, you know, as with all investments, there may be some losses. But I truly believe, unless there's a worst-case scenario for the next 5 or 10 years, taxpayers are going to, this is going to be one of their best investments. You paid a dividend of 5%. And that's, a lot of people would love to have that today. You've made mortgage modifications by the millions. The government efforts, on the other hand, have almost been, they've been very unsuccessful. And you did that at no expense to the taxpayers. You underwrote the losses. So you kept millions of Americans in their homes, families. You assumed failing institutions at the urging of the regulators. And in most cases, if not all cases, this was a great benefit to the taxpayers who insure those deposits. That's a real plus. As Mr. Mack said, you've reduced risk and leverage, something that has to be done. It's a necessary thing. And as I've heard, you've maintained a high level of charitable contributions. And so I commend you on all of that. Now, the thing that we need to talk about is lending. But I will tell you that in an economy as bad as our economy is, and in a challenging time, and with deposits, in some cases eroding, and economy in certain areas in shambles, I was simply shocked that lending wasn't down 10 or 15% across America. And when it came out that it was down 1% across the board, I thought that was wonderful news, that our economy could go through that type of shock and lending would go down 1%. I almost don't believe that. But it's a very good number. And I thought it should have been a wonderful, positive story. And I think that the capital injection cases in some case made a difference, although I don't know how much. I have one question, one urging, is I hear from responsible lenders, borrowers, who are not in default and who are paying their payments on time, their interest payments in some cases, that their principal's being called, that they're being asked to do a 10% call down on their principal, or that their credit lines are being restricted. And I know in some cases that this is probably good lending practice because you're seeing some deterioration. But I would ask you, can we do a better job in that? And can the regulators assist you in that? Or is there something that we can do to avoid those cases? Because there are people that can make interest payments now, but they cannot begin to pay down principal. It's just the wrong time. So to any of you who would like to answer that question. Or I'll call on Mr. Lewis or Ms. Stump. You didn't want the money. You took it, and you wish you didn't, I'm sure. But and we're going to make money on that investment. But you might answer the question.
Well, thank you. And we've clarified our statements. We are happy to have the money. It strengthened the industry, and that's good. A strong.
Well, yes, and I guess what I meant is first you said we don't need the money. But I appreciate it.
With respect to borrowers, in our company, frankly, we've been growing loans the last 18 months. As I mentioned in my testimony, many others have retrenched, and we think these are actually good times to make loans to creditworthy borrowers. We make money when we make loans. That's our business. We want to serve customers, help them educate children, buy homes, small businesses to develop products and services that they can sell and serve other customers. In some cases, it's prudent. You have to cut back on a line, but we have not done a system-wide. It's been very much individual, one customer at a time, working with them. And we want to stick with them if we possibly can. But also, unfortunately, not every borrower who wants or needs money can afford it today, and we have to be prudent.
I just would, if we're done with you briefly, that is such an important question that so many of us have been asked to get answers to. I would ask those to whom it's relevant, obviously not Mr. Brankfein or Mr. Kelly or Mr. Logue or Mr. Mack, but for the commercial bankers, if you could answer in writing, that would be very helpful. I think we would all like, because I think that's one of the most frequently asked questions we have. So for Mr. Diamond, Mr. Lewis, Mr. Pandit, Mr. Stump, if you could elaborate on that in writing, that would be very helpful.
If I could add one other thing, we have about $175 billion of untapped lines of credit, home equity lines, credit card lines, small business lines that are not being used. So there's credit out there, and we're winning new customers or getting new ones every day.
The gentleman from Pennsylvania.